Peter Schiff is the CEO of Euro-Pacific Capital. He's also the author of The Real Crash, America's Coming Bankruptcy. Peter, great to have you on Futures Now. Want to start off with the fiscal cliff here. If we get a deal and we avoid the cliff, what kind of deal do you think it's going to be? How's that going to impact the gold price?
Well, first of all, Ben Bernanke is a much bigger threat to the U.S. economy than the fiscal cliff. In fact, if it wasn't for his accommodation, all the QEs, we wouldn't have to go over the fiscal cliff. In fact, ultimately, because of what the Fed has done, we're going to have to go over a much bigger cliff. It's part of the solution to solve the problems that the Fed helped create by allowing the government to get so big. But I think if we avoid this cliff, which is a mistake, we actually need a bigger cliff that has a lot more government spending cuts. But if we get a deal, which I think likely we will do, because politicians want to pretend that they saved us from this phony crisis, so they set us up for a bigger one. But if we avoid the cliff, that is very bullish for the gold market, because it means that trillion-dollar-plus deficits will perpetuate. And these big deficits are what is undermining the dollar, because the Fed has to print money to finance them. And the more money they create to buy up all the bonds that nobody wants, the higher the price of gold is going to go.
All right, well, first let me respond to that for a second, because I agree with you in terms of the politicians having to try to find some deal so that they don't look bad, Peter. So I think you're definitely right on that. But when you talk about the money printing, if that scenario continues, it's something that I touched on last time in our last show as well with our guests. Do you think that that is, in fact, what's going to prop these markets up? Are you worried that that's the only thing, the only kind of momentum that we've got on our side?
Oh, it is. Unfortunately, all the moves that we're getting in the U.S. stock market are driven by inflation. It's not because the economy is getting better or that real earnings are going to improve. It's just that the value of money is going to be destroyed. And if you want to escape the destruction, you have to own something else. You have to own real things. I think that gold is going to outperform stocks, but stocks are going to outperform paper, and especially bonds. I mean, you still have this bubble in the bond market that is yet to burst. It's the Federal Reserve and foreign central banks that keep supplying the air. But the problem is the more money that central banks have to print to keep buying up these treasuries, the less the treasuries are ultimately worth, because you're destroying the value of the currency that they're denominated in. So this is very bullish for gold. And, unfortunately, the politicians, they're trying to scare us with the fiscal cliff. All the fiscal cliff means is that we have to start paying for all this government. So what's really scary is all the government that we have. And if politicians want to spare us from the fiscal cliff, then cut government spending so we don't have to pay for it.